Due to the consistent volatility that has been seen in the stock market this year, it is difficult for investors to predict what they are going to get as they proceed through the remaining months of 2022. Will we see a bounce similar to what we saw in July along with positive headlines? Or will continued uncertainty have a negative impact on blue chip stocks as it did in August? If you're experiencing a lot of stress because you're trying to trade based on the most recent headlines, you might want to consider taking a longer view of your portfolio rather than focusing on what's happening right now. These 8 dividend aristocrats are stocks that have an excellent track record of at least 25 consecutive years of raising dividends. In addition, these 8 dividend aristocrats all have dividend yields that are at least 2.5% higher than the industry average. Here are the top 8 dividend aristocrats. Number 8. ABBV Incorporated. ABBV isn't old enough as an independent firm to make our list because it was spun off from Abbott Laboratories in 2013. However, if you follow the pharmaceutical stock back to its parent company, Abbott Laboratories, you get an incredible streak of 49 straight years of dividend growth. Since ABBV was established to handle the pipeline of branded drugs, which is a separate endeavor from Abbott's provision of medical devices and diagnostic equipment, there is, to be sure, a somewhat increased level of risk associated with this aspect of the company's operations. However, as a result of the massive acquisition of Allergan in 2020 for the price of $63 billion and sustained success with the ABBV product pipeline, several industry analysts believe that ABBV is on track to become the largest pharma stock on the planet over the next 5 years. If you follow that line of reasoning, you can deduce that this company's long and illustrious tradition of paying dividends will most likely continue for some time. Number 7. Chevron. Chevron is just one of many energy companies whose stocks have captured the attention of investors in 2022 because of their superior performance in comparison to that of the rest of Wall Street. This is one reason why investors are paying attention to the energy sector. On the other hand, there is a lot more to look forward to in the long term than simply a beneficial windfall from higher oil prices this year. In the long run, there are a lot more things to look forward to. To be more exact, Chevron has increased its dividend payment for the past 35 years in a row, with the most recent increase taking the amount paid out per share up from $1.34 to $1.42. In addition, dividends still account for less than a third of the earnings that are projected for the following year, which means that there is plenty of room for further increases to these payouts in the years to come. This leaves lots of scope for future growth in the dividend distributions. Number 6. Clorox Company. During the pandemic, a large number of investors flocked to Clorox because of the company's strong position in the market for cleaners and disinfectants. The company's portfolio of Clorox bleaches, Formula 409 surface cleaners, Fresh Step kitty litter, and Brita water filtration products gives it long-term staying strength despite the fact that the stock had a more lackluster performance in 2022. The varied array of products and services generates reliable revenue, which in turn supports reliable dividend payments. As a direct consequence of this, CLX has not only racked up an astounding 45 consecutive years of dividend increase, but also has one of the highest yields among the companies on this list. Number 5. Coca-Cola Company. Many dividend investors consider the Coca-Cola Company to be a blue-chip stock and their top choice for investment. Because of its enormous market capitalization of $260 billion, the corporation dominates the consumer staple business sector like a heavyweight. It is the market leader for many other types of beverages, including Sprite and Coke, as well as Smart Water, Vitamin Water, Honest Tea, Minute Maid juices, Powerade energy drinks, and a number of other products. It has increased its dividends for over 60 years in a row, and has been in business for over 120 years, so it more than satisfies the requirements to be included on the list of dividend aristocrats. There are a lot of reasons to have faith that this firm has considerable institutional interests that will keep shares stable regardless of the market conditions. One of those reasons is that Warren Buffett's investment company, Berkshire Hathaway Incorporated, is a shareholder in Coca-Cola. Number 4. ColgatePalmolive Company. Colgate is a dividend aristocrat that has a great deal of staying power. It is one of the stocks on Wall Street with the most consistency and reliability. It was established in 1806, and it's difficult to imagine the company going anywhere in the coming decade. Thanks to a first-rate brand portfolio that includes its namesake toothpaste and dish soap, along with Tom's oral care products, Speed Stick deodorant, Palmolive soap, Hill's pet food, and a host of other products. In March of 2022, Colgate made public its intention to raise its dividend payment for the 61st time in a row. Given that dividends account for only roughly 2/3 of the company's total earnings, future dividend payments should be manageable. Number 3. Johnson & Johnson. It is difficult to conceive a firm in the United States that is more ingrained and resistant to economic downturns than Johnson & Johnson. It is in the healthcare industry, which, regardless of the state of the economy, is a sure bet when it comes to generating income and profits. In addition to this, it is a big company and a blue-chip stock, meaning that it is valued as one of the top 10 publicly traded firms in the country. In addition to this, it has a credit rating of AAA, making it one of just 2 companies on Wall Street to hold this grade. The other is the software giant, the Microsoft Corporation. Also in addition, it has an impressive track record of dividend growth, spanning over 60 years, making the company a dividend aristocrat in addition to other accolades. Number 2. Proctor & Gamble Company. It is another tried-and-true consumer stock that can be found on the list of dividend aristocrats that should be purchased right now. This corporation has long been a go-to for supermarket patrons due to the widespread popularity of its many items, such as the Gillette shaving tools, Tide laundry detergent, and Charmin toilet paper brands. Procter & Gamble's fiscal year comes to a close in July, and the company has lately reported earnings per share of $5.81 after dilution. That is more than enough to cover its annual dividends of $3.65 without any problem. In addition, it has maintained a pattern of annual dividend increases going back 66 years, beginning with the year of its initial formation in 1890. This means that the company has been paying a dividend for more than a century. Therefore, if you are seeking a secure income investment, you ought to include this stock on your short list of possibilities. Number 1. VF Corporation. Apparel behemoth VFC is the corporation that is responsible for name brands such as North Face, Timberland, Vans, Dickies, and other high-end lines of clothing and footwear. Despite the fact that shifts in consumer buying patterns have a significant impact on the company's sales of shoes, backpacks, and jackets, the company's operations may be relied upon due to its extensive product portfolio, vast distribution network, and direct-to-consumer outlets. And despite the fact that inflation is a very real risk, VFC continues to operate brilliantly. The company anticipates a moderate increase in revenue for both the current fiscal year and the following one. VFC has an incredible track record of 48 years with consecutive dividend increases. So, investors can have faith in the staying power of this dividend stock despite the fact that earnings continue to be slightly strained as a result of both the cost of inputs and the rates at which currencies are exchanged. What did you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.